Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar remains under somewhat pressure as the US dollar extends overnight gains, with the DXY approaching fast at 96.60, rising the risk of a potential bull trap in the next coming days. Domestically, the Australian labour data were broadly steady, with the unemployment rate holding at 4.1% in January. Employment rose by 17,800 jobs, with a 50,000 gain in full-time jobs offsetting a 33,000 decline in part-time. In trend terms, employment edged down from 4.2% to 4.1%, a 9-month low, while offshore the US dollar found support after the minutes from the January 27-28 FOMC meeting indicated that policy makers were in no hurry to cut rates and were open to further tightening if inflation remains persistent, even as Chair Powell reiterated that rate hikes are not the base case. The minutes also noted that many officials see signs that the US labour market has stabilised, with the Fed holding rates near 3.6% after 3 cuts late last year, thereby reinforcing the near-term policy divergence that weighs on the Australian dollar. Looking ahead, now we are waiting for the global PMI readings and Friday's US data, which looks towards a US GDP and the Federal Reserve's preferred inflation gauge, the personal consumption expenditures, all known as the PCE price index, which is a key to assessing progress towards the Fed's 2% long-term target. So turning to the technicals, they are still buckled and still weighing on the support, which could see a move down towards the region of 70.35 or 69.70, with a cap seen around 71 cents. Turning to the euro, it took a heavy tumble overnight after the Fed minutes showed officials are comfortable holding rates. Along with that, also weighing on the market price, is that ECB President Christine Lagarde could leave her post ahead of schedule, which is somewhat surprised. Turning to the technicals, the ADX is trending to a bear case. We're still finding heavy technicals that could see a move to 117.60 and reassess from there, as it's only 30 points away in case the market does actually trigger stops, as we are getting close to the previous lows, and drop to 117.10.15, where I feel potential bargain hunters may lurk. After assessing yesterday, the market did rally for dollar yen and therefore looking now towards the region of 155. I feel there is a bull trap in place. Technically, when you view how the market's been trading, I feel there is little scope beyond 155 to 156, and therefore if the bull trap is set, then we could see the market tumble, especially with the fact that the MACD is very much on the limited of any rally. So let's keep an eye on that top side. If we do see a drop or rejection, that is looking for a target of around the lows of 153. We're still keeping this year's target at 151 in focus. A very heavy play when it comes to sterling. That could see a drop further now to the lows of 134, given the fact that we have got an ADX trending and low RSI and also a MACD. But there is a little bit of weakness in terms of the fact that the break of 134.65 could trigger the downside move. Well, no doubt bargain hunters missed out on gold as it jumped quite significantly on Wednesday, more than by 2%, but they're still keeping bargain hunters beneath this level, which is close to where that trend line is at 4,640.70, given the fact that the market is still somewhat on edge due to ongoing US and Iran tensions and a cautiously hawkish tone from the Federal Reserve. The markets could actually see a break to the upside, and that is head on towards this year's target of 5,100, 5,200, or even to the broader call eventually of 6,000. An interesting rally when it comes to oil, rejecting that bottom side around $62, finding no follow through, and from the strength is back on target, reaching 66.50 and reassess from there. Well, that's a wrap. Thank you for joining me. And as always, look out the interest report. I hope you enjoy the great start to the day.